All right, so today we're diving into the world of Bitcoin.
But with a twist,
Okay.
we're breaking down the Yieldmax Bitcoin Option Income Strategy ETF.
YBIT for short.
And we've got some pretty interesting info from Yieldmax's website.
And SeekingAlpha to help us kind of unpack this really unique ETF.
Yeah, it's definitely unique.
People see Bitcoin and they think, oh, this is a straightforward investment in the cryptocurrency itself. But
Right.
that's not the case here.
Not even close. And that's where things get really interesting,
All about generating income, but not by directly holding Bitcoin.
which I think might surprise some listeners tuning in, right?
Absolutely, yeah.
This ETF actually uses what's called a synthetic covered call strategy
Okay.
on Bitcoin ETPs.
Whoa.
It's a mouthful, I know.
But stick with us.
Okay.
It's fascinating stuff.
Okay, before we get lost in the weeds here.
Let's define a few things.
Sure.
So you might be thinking,
What exactly is an ETF?
think of it like a basket of assets, like stocks or bonds.
All bundled together that you can invest in with a single ticker symbol.
Easy peasy.
It's like a pre-made portfolio, really.
And in the case of YBT, instead of directly holding Bitcoin, they're using these things called ETPs.
Okay.
ETPs are similar to ETFs.
But they're designed to track the price of a specific thing, like a commodity, a currency, or in our case, Bitcoin.
So YBT is placing kind of calculated bets on where the price of these Bitcoin ETPs might go.
But instead of just buying and selling the ETPs directly, they're using this synthetic covered call strategy.
With options contracts.
Sounds kind of complicated, right?
It sounds more intimidating than it is.
Imagine loaning your friend your car,
Okay.
but you charge them a fee for the right to borrow it.
Yeah.
That fee is like the option premium.
Right.
They have the option to buy your car at a set price.
Even if its value goes up.
YBIT is essentially doing this, but with Bitcoin ETPs,
Okay, so they're essentially collecting rent on these Bitcoin ETPs.
hoping to make money regardless of whether the price of Bitcoin goes up or down.
Exactly.
And there's another layer here.
Right.
Yieldmax is very particular about the Bitcoin ETPs they choose.
Oh, really?
They prefer ETPs that actually own the underlying Bitcoin.
What they call physical or spot Bitcoin, rather than just tracking its price through derivatives.
That makes sense.
You want the ETP to be as directly linked to the actual Bitcoin price as possible, right?
Right.
But why else are they so picky about their ETPs?
So they also prioritize ETPs with...
High liquidity in their options,
Okay.
meaning there's a lot of buying and selling activity.
Think of it like a busy marketplace.
Okay.
It's easier to find a buyer or seller quickly when there are lots of people around.
All right.
This liquidity helps YB execute their strategy more efficiently.
Potentially leading to better returns for investors,
So they're aiming for smoother trades.
which means lower costs and potentially more money in your pocket
Right.
down the line.
Smart.
But how does this all translate into actual cash for an investor?
So that's where the income part of its name comes in.
YBIT aims to distribute income monthly.
Okay.
However, and this is crucial to remember, there's no guarantee.
And digging into the numbers on the Yieldmax website,
You can definitely see that lack of guarantee playing out.
as of October 4th, 2024.
Their distribution rate is listed as a jaw-dropping 88.70%.
Wow.
Now, before you go cashing in your retirement fund,
Right?
remember that number includes option income
Okay.
and is based on recent performance.
It doesn't mean you're guaranteed that kind of return consistently.
It's a bit like seeing a basketball player score 50 points in a game.
And assuming they're going to do that every single game,
Right,
you got to look at the bigger picture.
precisely. And that's why the 30-day SEC yield,
Is essential to consider as well.
okay,
It paints a slightly different picture.
this yield, which was 4.07% as of September 30th.
Only factors in net investment income
Okay.
and excludes any option income.
Okay, so it's important to look at both figures.
To get a more realistic sense of potential returns,
But there's another wrinkle here, isn't there? Something about the makeup of those distributions.
you've got a sharp eye.
Those distributions can include dividends, capital gains,
Oh.
and even something called return of capital,
Okay.
which can actually decrease the ETF's net asset value over time.
Wait, so part of the payment you receive might actually be a chunk of your original investment.
Coming back to you.
That's wild.
It's not as alarming as it sounds,
Okay.
but it does highlight the importance of understanding where those distributions are coming from
Right.
and not just focusing on that headline rate.
It's all about looking beyond the surface, isn't it?
Yes.
And speaking of looking beyond the surface.
Those past distribution amounts are all over the map.
Yeah.
For the past few months, they've been 0.7976, ZAR 1.7066, 0.6705, 1.2164, 1.3707.
Yeah.
That's a roller coaster.
And that, my friend, perfectly illustrates why past performance.
Is not necessarily a reliable indicator of future results.
Right.
Now, with all that said,
This strategy, like all investment strategies, doesn't come without its risks.
okay.
And we're not just talking about your run-of-the-mill market fluctuations here.
Okay, you've piqued my curiosity. What kind of risks are we talking about?
Let's dive into those, because from what I'm seeing, the source material is not shying away from them.
Oh, absolutely.
There's more to these risks than just Bitcoin's kind of infamous price swings.
Right.
While Bitcoin's volatility is definitely a factor.
Yeah.
Remember, YBT is playing in the world of options.
And that introduces a whole new level of complexity.
Okay, walk me through it.
What are the kind of big ticket risks that we need to understand here?
Well, first off, you got the inherent risk of digital assets themselves.
Okay.
Bitcoin and the broader crypto market are still relatively new.
Which means they can be prone to regulatory changes, security vulnerabilities, and even market manipulation.
That makes sense.
It's a bit like the Wild West out there in crypto land, and since YBIT relies on Bitcoin ETPs.
Any problems with those ETPs are going to directly impact the ETF, right?
Exactly.
You got to consider the ETP's structure, its liquidity,
Okay.
and even the potential for issues with the institutions that hold the underlying Bitcoin.
Right.
It's like a chain reaction of risk.
And then there's the whole options trading aspect, which is...
a whole different ball game than just buying and holding an asset, right?
It is.
With options, you're dealing with things like time decay. The value of an option literally erodes as it gets closer to its expiration date.
Right.
Then you got implied volatility.
Which is a fancy way of saying how much the market expects the price of the underlying asset, in this case Bitcoin,
right?
to fluctuate.
Right.
The more volatile things are, the riskier and potentially more rewarding those options become.
So it's like you're trying to predict not only where the price of Bitcoin will go,
but also how wildly it will swing on its way there.
You got it.
And remember, those covered calls YBT is selling?
Yeah.
They come with their own set of potential downsides.
Okay.
If the price of BITO skyrockets, YBT might miss out on some of those gains because they've essentially capped their upside potential by selling those call options.
So while the covered part of a covered call offers some protection,
there's still a chance they might leave some money on the table if Bitcoin takes off.
Exactly. It's a trade-off.
They're giving up some potential upside to generate that income stream.
Okay, that makes sense.
Now, I'm also seeing something here called a median 30-day spread.
Right.
In our data from SeekingAlpha.
It's listed as 0.44%.
To be honest, I have no idea what that means or if it's good or bad.
Don't worry, that one often throws people off.
Think of it like this. Imagine you're at a currency exchange counter.
Okay.
And you see two prices listed for the US dollar.
Right.
One for buying and one for selling.
That difference is the spread.
Okay, so a smaller spread is generally a good thing.
Right.
Yeah.
Less difference between buying and selling.
Precisely.
And in the context of ETFs, a smaller spread generally translates to lower trading costs for you. A 0.44% spread, like YBIT's, is relatively tight, which is a positive sign.
It suggests there's a good level of liquidity and efficiency in the trading of the ETF.
Got it. So a smaller spread means things are running smoothly.
And I'm not losing as much money to trading fees.
Right.
That's definitely a win, but...
Let's shift gears for a moment and talk about YBIT's performance.
How has this whole strategy actually played out in the real world?
That's the million-dollar question, isn't it?
Right.
Now, keep in mind,
past performance is never a guarantee of future returns.
Right.
But it can give us some clues.
Absolutely.
So what are the numbers telling us?
Give me the good, the bad, and the ugly.
Well, as of September 30th, 2024.
YBT is down about 13.81% since it launched back in April of this year.
Okay.
Based on its net asset value, or NAV.
If you look at its market price performance, it's down around 11.62% over the same period.
Not exactly stellar performance.
How does that stack up against the broader market?
For comparison, the S&P 500 Total Return Index, which is a broad measure of the U.S. stock market, is up a healthy 15.72% during that same time frame.
Okay.
So YBIT has lagged behind the broader market, at least in these early stages.
Okay, so it's important to keep those broader market trends in mind.
It's not just about how YBT is performing on its own,
Right.
but how it's performing relative to other investment opportunities.
Right.
Speaking of which,
Let's peek under the hood and see what YBT is actually holding in its portfolio.
okay.
Because sometimes the holdings themselves can reveal a lot about a fund's strategy.
Absolutely. Now, looking at YBT's top holdings, as of October 7th, 2024.
The first thing you'll notice is a significant chunk of their portfolio is in U.S. Treasury notes and bonds,
Okay.
a much more conservative asset than Bitcoin.
You're right.
They make up almost 70% of the portfolio.
That seems a bit counterintuitive for an ETF with Bitcoin in its name, doesn't it?
It might seem that way on the surface, but this actually makes a lot of sense when you consider their overall strategy and approach to risk management.
Okay.
Explain it to me like I'm 5.
Imagine you're building a house.
Okay.
You wouldn't just build the roof and hope for the best, right?
Right.
You need a strong foundation to support everything else.
Right.
That's what those treasury holdings are like.
Okay.
They provide a level of stability and income generation that can help cushion the portfolio against the volatility of Bitcoin and the options trading.
So even though they're aiming for income from Bitcoin, they're not putting all their eggs in one basket.
It's like having a side hustle to even out the ups and downs of your main gig, but
Right.
what about the other 30% of the portfolio?
Right.
That's where the Bitcoin action is happening, right?
You got it.
As of now, that remaining portion is primarily allocated to call options on the ProShares Bitcoin Strategy ETF, BITO.
Okay.
And quite interestingly, a sizable chunk of cash.
Oh, wait. Cash.
Like just sitting there doing nothing.
Right.
What's the deal with that?
Well, there could be a couple reasons for this.
Okay.
It could be that YBIT's managers are being strategic in a volatile market,
Right.
holding back some cash to capitalize on potential opportunities that might arise.
Think of it like having dry powder ready to deploy when the time is right.
So they're choosing to be a bit more cautious.
Exactly.
Or it could also be related to their options trading activity.
Right.
When they sell those covered calls, they might need to hold a certain amount of cash as collateral,
Right.
just in case the buyer of those options decides to exercise their right to buy the B2O shares.
So it's like having some emergency funds set aside.
Just in case things get wild with their options trade.
Exactly. It's all about managing risk.
Now, beyond the cash position, the fact that they're so heavily invested in options tied to a single Bitcoin ETP, BITO,
Does raise a significant point about their strategy.
I was just about to say that concentration in a single ETP.
Seems like it could be a bit of a gamble, doesn't it?
What happens if B2 runs into trouble?
You hit the nail on the head.
That's what we call single issuer risk. They're essentially tying a significant portion of their fate.
To the performance of BITO.
Right.
If BITO goes down, YBIT is likely going down with it.
Okay, that's a little unnerving.
It's like putting all your chips on red at the roulette table, hoping for the best, but
Right.
then again,
That's kind of the nature of investing, isn't it?
it is.
Taking calculated risks.
Yeah, and that's why diversification is key,
If you're considering an ETF like YBDI
right?
with its inherent concentration risk.
It's crucial to make sure it's just one piece of a larger, well-diversified portfolio.
That makes a lot of sense.
Don't put all your Bitcoin eggs in one basket, so to speak,
Right.
but beyond just this single issuer risk.
We've talked a lot about the potential downsides of YBDO.
What about its potential?
Sure.
What makes it an attractive investment option?
For some people.
That's a great question.
Yeah.
It's all about your individual goals and risk tolerance.
Right.
For some investors, YBIT's income-generating potential might be appealing.
Especially in a low-yield environment,
Okay.
if they believe in the long-term growth potential of Bitcoin.
But also want to receive some cash flow along the way.
Right.
YBIT could be a way to potentially achieve both
So it's like a way to dip your toes into the world of Bitcoin investing.
without going all in.
Right.
You get some potential upside if Bitcoin performs well.
Plus, you're collecting some income while you wait.
You got it.
It's a way to potentially smooth out the ride a bit.
Especially for those who might be intimidated by Bitcoin's volatility.
Right.
Of course, all of this comes with those risks that we've discussed.
It's a trade-off.
And speaking of risks,
Before we wrap up, I want to circle back to something that we touched on earlier.
Okay.
The crypto landscape is constantly changing with new regulations.
new Bitcoin ETPs popping up all the time.
Yeah,
How might these factors impact YBT's future?
that's a really important point to consider.
Imagine, for instance, regulators cracking down on certain types of Bitcoin ETPs.
limiting YBT's options,
Really?
or flip the script
Envision a new, more efficient Bitcoin ETP.
with lower fees hitting the market.
Right.
YBT might seem less appealing in comparison.
Right.
It's a dynamic environment.
It's a great reminder that what looks good today might not be the best option tomorrow.
Especially in a fast-evolving space like crypto.
Right.
It sounds like staying informed and adaptable is crucial.
Absolutely. A lot to
Yeah.
digest.
But hopefully this deep dive has given you a solid foundation for understanding YBT.
And its intricacies.
Right.
It's a unique ETF with its own set of risks and rewards.
Well said. We've explored its strategy, its potential,
And most importantly,
those crucial risk factors.
remember, knowledge is power.
And always do your own research before making any investment decisions.
You got it.
And on that note, we'll wrap up this deep dive into the Yieldmax Bitcoin Option Income Strategy ETF.
Until next time.
Keep exploring, keep learning, and we'll catch you on the next deep dive.